Okay, so what I want to do here this morning is take a quick look at the 5-minute charts that I set up from time to time. And what you're looking at right now is the cable across the daily 5-minute and then the two 5-minute setup charts that I have. So the main charts that you're going to be using are the chart in the upper right hand corner and the two bottom charts, depending upon whether the market's in an uptrend or a downtrend. So I'm just on the cable right now because that was one of the charts I was looking at. And here's the reason for it. You can see the market had basically made a double top. I don't believe it was a solid top. The high was 56.40, 56.46, and this high here was 56. Oh, I don't know what this was. Well, whatever it was, you can see the double top there. So that's what I initially look at. I'm not too worried about details right off the bat. But what I am interested in is the actual markup cycle, which you could see here with the angle of the wave, the 34 EMA exponential moving average on the high, the low, and the close. So what I think I want to do now, and if you see such an angle, is you want to go ahead and determine if the markup cycle is, number one, going to hold and if it's strong enough. Now this one, just as we're talking, is breaking down, so I have to move on to the next chart. Let's go ahead and take a look at the Euro US dollar. Here you can see, take a peek at the angle of the wave. Now the reason for the three charts, you really don't need the daily in this situation, but the reason for the three charts is I need to know the market cycle of the 5-minute. You can see I've also got overlaid the pivots here, the R1, the high, the pivot point, things like that, because when you're trading really short-term intraday, I think this type of information, pivots, can be very important. But let me mention, and let me show you here real quick, I think a lot of times when you get a pivot, automatic pivot plug-in, you can get on, say, MT4, or even if you're calculating them yourself, you have to know what you're actually getting. And I'm actually showing you here what my plugin does. And this is just a plugin that my programmer did for me. I use eSignal for a majority of my futures trading and a good deal of my Forex trading too. But notice that I put my session start. I'm on the East Coast. I'm in Florida, so I use a 2 a.m. session start, which represents basically Frankfurt, the Frankfurt Open. I have my market open time start on Monday. I have it close on Friday, and I have my session closing at 12. Now remember, since this is a pivot point, you have to have an open and a close. So we're kind of manufacturing that. We're manufacturing that based really upon the Europe activity. So 2 a.m. to noon is what I'm focusing in on, and that's what you'll see here represented on the chart. All right, so make sure you understand, most of the time if you get some sort of plug-in, they'll utilize a GMT, which is fine. GMT is fine too, but just know what open and close times are being used to actually calculate your pivots. Okay, so I don't have a markup or a markdown on the Euro US dollar. I'm going to jump on over to the dollar yen, where it looks like I do have a really nice markdown. Okay, so since I have a markdown and prices are contained within the resistance of my wave here, my 34 EMA wave, in fact 34 EMA low is holding prices in check, I'm going to go over to the red chart, which is the downtrending 5-minute chart. And what I have here when I look at the downtrending 5-minute chart is essentially the 13-period exponential moving average on the close, the 21-period exponential moving average on the close, the 34 on the high, again exponential, and the 55 on the close. So the light and dark green are the 13 and the 21. The dark is the 55. The lighter of the two reds is 34. So what I'm looking for is a between the greens short. Now you can see as the market's been heading lower, I've had, let's see, 1, 2, arguably 3, maybe 4 opportunities for between the greens. I like to say between the greens, not necessarily just at the 13-period low, because this way I know, at least factoring in the spread, you're going to get your fill. Right? So if you were to put, for example, a limit order to sell at whatever price the 13-period close was plotting at, and we get in between the greens, I at least know at that point you're going to get your or better than fill. So that's why I go with between the greens. So these are between the green shorts, and I'm just simply waiting on another bounce. Here I'm waiting essentially on a bounce to the lower line, and that is a 89.40 13 EMA close level. So I'm looking for a level there, and it extends up to 89.43. between the top green and where the reds start is basically no man's land. This is not anywhere you're necessarily wanting to enter a trade, but it's basically a place where the trade is valid, but you're not really looking at a positive move in your direction. You're basically looking at where the trade is just going to have its wiggle room, where it's not moving for you, but it's not necessarily hit its point of validity up here at the reds. The reds are basically the warning track and your stop loss. Right now you can see they're overlapping. Usually you'll see a separation like this where the lower of the two and the downtrend will be your warning track, and then you'll have your out with the higher of the two. I prefer to see good organization, so if I'm looking at a downtrend, I'd rather see light green, light red, dark red. That's preferable. If, for example, the reds were intertwined with the greens, there's no organization, don't take the setup, regardless of what the 5-minute wave chart is indicating as far as a markup or markdown cycle. So this is really just essentially swing trading on a very short-term intraday cycle. The reason I'm talking about this today, and the Swissy, by the way, nothing. The reason I'm talking about this today is I've been very actively doing this since November because of the way the price action has been moving. Here's a pretty decent triple top on the dollar Canada intraday 5-minute, but this is a very fresh markup cycle. And notice my organization here is, nah, it's not great. So I'll wait. 5-minute charts mean what? 12 new candles every hour. I can afford to be choosy, and I think you really should be choosy with your short-term intraday time frames. All right, Aussie, not so much. Kiwi, nah. Next, Euro Yen. It's trying. I could look at the downtrending chart, but again, is this the best I can see in terms of a markdown cycle? How about I give it a handful of candles and see if the markdown cycle establishes itself any better. And then finally, the pound yen. Same thing. Let's give it a handful of candles and see if it establishes itself any better. All right, so I apologize for the speed at which we went through this, but I didn't want this to be a long, drawn-out video. I wanted at least you to be able to see how I go through some of the pairs that I watch. In fact, by the way, I'll do the same thing on charts like the Dow. I know the E-mini S&P is a popular one. I actually find the Dow a whole lot easier to trade. I think the psychology of the Dow is a little bit more herdish, a little bit more general public, and I find it's a little bit easier to trade than the E-mini S&P 500. That's just me. So first, instead of looking at the ES contract, I'll trade the YM. That's just my preference. And quite frankly, even though the ES is a better cross-section of the equities market, let's face it, the Dow still is the barometer by which people measure strength or weakness in equities. So that's why I watch the YM for my Forex trading and for my actual futures trading. And I'll actually also intraday trade the dollar index, the DX contract. So it doesn't matter what the pair is. I'll go ahead and lay it up on this 5-minute chart. In fact, the 5-minute was born of my equities index trading, my futures trading, and also my stock trading back in the mid to late 90s. So this is a pretty old setup that I've been doing in other markets that, again, it's just the psychology we're trading. So it has less to do with the market I'm applying it to and more to do with the cycle that symbol is in. All right, thanks for joining me.